welcome back to another episode of the Globe Talks to Traders series, where you can learn the ins and outs of crypto trading. I'm your host Sunlight, and today I'm joined by Coby Lim, Principal Trader at Floating Point Group. So watch on to find out his tips and tricks on how to trade on leverage, and also his personal thoughts on the current market situation. Now onto the interview.
The Globe mobile app is now live on the Apple App Store. Trade anytime, anywhere, with any asset as collateral. Stay connected with all your positions on the go. Globe, exchange everything, now even easier. So, hello Coby, how are you?
Hi, good. So yeah, still a 24-night week, but yeah, really glad that this thing happened. Oh yeah, nice speaking to you.
Yeah, and you too. So, could you tell us a bit about yourself and how you got into crypto trading?
Yeah, my name's Coby. My background is I was largely in TradFi previously, so that largely dealing with equities and also the likes of some derivatives. That was back in 2012. Funny thing is, I only got into crypto in 2017, but in 2013, that's when my friend actually shared with me something called Bitcoin, this thing called Bitcoin. But back then I was like, the whole TradFi traders like Bitcoin, what's this? Something which I don't really understand now. It's a scam. Yeah, but the scam went from 10 to 100 and yeah, and the rest is history. So yeah, that's kind of how I got into crypto in 2017, when I think there was a huge burst of momentum. That's when hey, I gotta get into it. So yes, I rode the downturn in 2018 and just rode all the way down. And there are many cycles like all the markets do. And here we are. Yeah, so back then in 2017, I got into it during the peak of the hype, near the peak of the hype. Just before 20K. It was like day after day of $1,000, $2,000 move, that kind of thing. That's when I kind of jumped in, and it peaked at about 20K. So yeah.
Awesome. So, you are the principal trader at Floating Point Group. So, could you tell us about the core services that Floating Point offers, and why are you guys focused on institutional clients?
Yeah, so I think the core services I think it's divided into two main pillars for Floating Point Group. One of it is actually sort of like a bespoke trading desk service that we offer. So it's a bit different on like how the other trading desks and OTC desks do offer. For us, we are pure agency, i.e. we execute for you on best efforts basis, and also at the same time we recommend certain strategies that one may need or may have. I think that's the important part. That's what we do to actually kind of like differentiate ourselves. I think the other one is our capital management service. So, our founders are based from MIT. So, for them, I think technology is what's important for this. And we have a platform, what we call Flow Vault. So it's efficient, if easy capital management. To put it in a nutshell, imagine if you have 10 different exchange accounts. All right, so 10 different exchange accounts, you have to log into each individual one to, kind of manage both, if you want to transfer assets and all this. What this platform does is we can whitelist all these accounts under our one platform, log into the platform, and you can just, it's pretty much like a drag and drop in a sense, in a nutshell. So it's easy capital management for that. And why institutional clients? I'll say we at FPG, we strongly believe in the future of crypto. And also the future position that crypto would have in our world. And institutional adoption is one key and very important aspect of this. That's when actually I would say the true funds, the true money, those from the hedge funds, the banks, actually that's when they'll really come in and bring the real money into this crypto world. But at the same time, when that does come in, the next level is, how to make it safer, for the retail, the masses beyond, I think, the institutional and the high net worths. That's when regulations will come in. With regulations, crypto would eventually reach a state of true mass adoption. So yeah, institutionals, we really do identify as the first key stepping stone towards mass adoption.
Awesome. So you guys aren't closed off to the idea of eventually catering to retail?
For now, our focus is solely for the high net worth and the institutional clients. We do not have plans as yet for that. You can just think of it as we're just doing our part, in this whole big crypto development ecosystem the next 5 years, 10 years, to build out this foundational aspect, like before, maybe there may be other better retail, retail solutions that pop up and all. So yeah.
Yeah. Awesome. So it's funny you mention regulation, right? So how does the regulation differ from, if you're an institutional client versus a retail?
Yeah. So I think one key thing is in the horizon, I think many have been speaking about is actually the travel rule. So I think travel rule will really come in hard and fast, not only for institutionals, but also for, I think, individuals. But one main thing for institutionals and versus individuals, high net worth individuals, that institutions will definitely have a lot more layers because of the the various ownership that governs it. And while as everyone knows, there are different jurisdictions, for different kind of companies and entities. They're being set up everywhere. So I think that's one key, I think, complicated part that we encounter with like institutions versus high net worth, just purely individuals.
Awesome. Awesome. So could you tell us a bit about what sets Floating Point Group apart from its competitors?
Okay, what sets us apart? I'm just bringing back to the previous point I was highlighting about our trading desk. So our trading desk, there are a lot of other OTC desks like like Wintermute, even Coinbase is one, and all of this, many others. But what sets us apart is that we are going more of a white glove trading desk service. White glove, what do I mean by that? It's kind of like, hey, like you're a counterparty, you come to us, and for us, it's like, say you want to buy $100 million worth of asset X, asset A. How best can we do it? For us, what we do is we try to we analyze the numbers for it based on the market volatility, volumes, across different exchanges. And for us, we do not just tap on one exchange. We can just access multiple liquidity avenues, and from there we craft the appropriate strategy for you to execute your order, your trade. And that's kind of like a bespoke manner. That's what we're actually looking for, bespoke white glove. There may be other inquiries, like, hey, like I have a little coin that's, like coin XYZ. It's really thinly traded and stuff like this. For us, we try our best. If it's, like it passes all compliant checklists and everything, we're good to go. We try our best to help to execute for that. So I think that's something that it's kind of unique for us. We try to suit our clients' needs and all beyond the stable stable checklist and stable list of trades that we usually do. So I think that's one key thing. But beyond that, well, we not only the trading desk service, but we kind of partner it together with our offering, our capital management offering. So it's kind of like, if you need this, you can actually use this other platform that we have to have easy capital management.
Awesome. So it's kind of like a one-stop shop for institutions and high net worth individuals, right? So you said, you've been in TradFi and now you're in crypto trading, but can you tell us a bit about, the best trading strategies that you've found, and like if you can apply TradFi trading strategies to crypto trading?
Oh, definitely. I think definitely for that, well, not financial advice or anything, but yeah, just to share some of the ones. I think those delta neutral ones, where usually you long a spot and maybe a short a perp. So just to net off your downside, and all, I think those are good. But of course, there may be on the other side, people may argue that, hey, you may not capture the full extent of a particular direction. But well, in all trading, like I think the trading strategies and all trading consideration, the important thing is to minimize your downside also, just not looking on, the potential positive. The inverse negative may happen. You have to take care of that. I think those delta neutral strategies is one important one. Well, next one is actually arbitrage trading. It's like, the recent Ethereum merge. There is an airdrop of a second Ethereum proof of work, across a number of exchanges, and all the exchanges have actually their transfers closed out. So in a sense, right after the transfers open up, we can actually do some arbitrage trading for our own. So as a retail trader, that can be possible, but of course, the window closes up quite quickly, right? So because like people will take advantage of the opportunity, and well, it kind of nets off after a while. Once the transfer window open. I think the last one is many of us have probably learned in the past 2-3 years of the COVID boom, trend trading. So I think that's don't go against the trend. If what do you want to trade? If you can trade within an uptrend, try not to be too bearish during an uptrend, because well, that's trading counter trend. So that's one thing that I'll say is best.
Awesome. Thank you so much. So, obviously, right now we are, going into a recession. We're fully in the bear market right now. Um, do you have any tips for trading in times of economic downturn?
Yeah, in times of economic downturn, well, I guess some people will tell you like do not trade. Like there definitely are opportunities abound. Even within the upturn, downturn, or whatnot. Well, the key thing is identify the asset class that would benefit most, or would have the appropriate swing that's in line for theory. I think one thing is do not trade something that you do not really fully understand. Like for example, if bonds is not your thing, there's no need to force yourself to go and trade bonds for that. Like this, or maybe now currently, I think US dollars on a tear, going up. And like the markets aren't doing that well either. So parking your assets in US dollar. Actually, to me, it's you can look at it, it's sort of like an investment or like a trade position also, it is totally fine to not make a trade during times of economic downturn by positioning yourself. It is still a long, but you are just kind of like long US dollar in that. So that is still pretty much a good strategy to take. But of course, for those who are a bit more adventurous, well, in times of economic downturn, liquidity would probably dry up, and every single bounce wouldn't bounce very high. So if you look at the flip side, you'll be like, hey, why don't I short? That's not to say that like everyone should short during a economic downturn or market downturn because it's a bit different. You do not want to be caught on the bad side of a short also. But yeah, if you're someone who has some experience, a bit more adventurous, and can risk manage well, yes, shorting on bounces, I think that's one good thing. And yeah, harkening back to I think one of the trading strategies which I highlighted, which is a delta neutral trading strategy. So that's another thing. Like what's up and down, just depending which direction you take, just kind of like block off your downside in that sense. Yeah.
Absolutely. So it's all about, managing your risk and making sure you don't get liquidated.
Yeah. So I guess in the past 2 years, spoken to many people, risk management is one thing that has been parroted and is mentioned, but I guess the influx of free money, easy money, I'd say in the past 2 or 3 years, that has kind of been like, on people's left to the wayside, or like it is something that people are learning. Then eventually during downturns such as this, and that's when they truly learn like, oh no, I should have better managed my risk. I should have only played with funds that I really can't afford to lose and all this. So yeah, it really is down to that, like risk management, size management. And it's totally okay to not leverage or even trade small sizes and all that. Because in the longer run, what you want to see is a longevity of your trading career, of your trading journey. You don't want to be like caught in a huge burst of fire whereby like, hey, I'm gonna make I don't know, like 2x, 3x within a short period of time. And then somehow over the next 6 months, I'm gonna like burn it all away and more. That's not a sustainable thing to be in. You'll be forever in like a mental duress and all this. Not a really fun thing to be in, but yeah, think of a longer term.
Awesome. Yeah. So could we get your, most and least optimistic price predictions? Once again, not investment advice.
Not investment advice. So recently I did a little analysis on some of the, I think, the past trends. I think I'll say for crypto first, since we're on topic of that. I think for cryptocurrencies, for this Bitcoin as one of the leader of the whole cryptocurrency market. If you look at the past three I think the cycles, from the peak to the trough of the bottom of the market, like in 2017, in 2015, if I'm not wrong, it retraced about 84 to 85%. So that puts us at where we are now. So our recent peak was about 69K for Bitcoin. If it does retrace about 85%, that'll put us about near the range of 10K. So that could actually be a like one of the base case scenario. If it does go down all the way kind of thing, yeah, 85% would be about 10K. And that's not something out of the realm of impossibility. Why? Well, macro situation, if you look at it now, not only inflation, but I think numbers coming out of the US in terms of housing and all this aren't exactly rosy. It's just that it hasn't been reflected into the markets, in the indices and all this as well. Yeah, so I think that's pretty much, I think, one of the key number that I'm looking at on the downside. But well, if like there's also another camp of people who are saying that, hey, if you're going to be positive about it, like market has priced in most of the rate hikes and all, and whatever negative numbers that we have, I'll say 25K would be good. for, I think, for the end of the year. If it does go there, well, that sounds a bit, like positive if it goes 25K. But why 25K? I think that's one, besides, I think, some of the technical indicators, but looking at the option side, number of the smart monies are also placing a bets on that range of 25,000. So I think that's also a reasonable number. If you look at it, it's been historically been a huge support / resistance whenever it was breached. Yeah, so testing that, I think it is, well, if things are rosy, like the Fed decides that, hey, inflation really is coming down, and they're gonna like taper a bit on their hikes, then yeah, sure. Yeah. So I think these are two of the numbers that we could possibly look at. But well, it could go sideways, like hit nowhere. So
exactly.
You never know.
So I think the question on everyone's mind is, when will this bear market end?
I would like to know that too. Yeah, but when will this bear market end? Well, if you were to ask some of the older Bitcoin guys, Bitcoin people within those who have got in 2011, 2013, they would use a very simple thing as a guide, which is the halving effect. So I think 2020 was the last halving. Next one will come in about, I guess, 2 years. I think that's probably a good indicator for that. And well, yeah, halving essentially means the sort of like the supply, the daily supply being created is going to be halved, and yeah, that naturally leads to a possible supply squeeze. But for me, what I do think is, I'm just going to cover like some of the scenarios that that I do think through. One is that looking at the macro bigger picture for this is that if economic indicators were to deteriorate very quickly in the next 6 months, that will no doubt could possibly force the Fed to kind of put a break to the entire rate hike scenario and all this. So that could spell a short-term bottom for the Bitcoin as a whole. Because like economic indicators have deteriorated way too much. But of course, that if in that scenario, I do not expect a sort of like a very rapid V-shaped kind of recovery like what we've seen from COVID and all this too. So I guess in 2023, I think that's an optimistic time that we could look towards a possible bounce. I think in the longer term bounce, a possible a base forming before as we start to have a reversal. Yeah, I think that's in terms of a possibility that I'm thinking of. Well, then the other is like things do not improve, and things just keep grinding down all the way, and well, wait for the next halving in 2024. Then it won't be a super long wait. But like 2 years in crypto is still a very long period, in crypto, because when everything moves so fast, and yeah, it's insane.
Absolutely. So yeah, so how do you keep a level head as a crypto trader?
Yeah. So one thing that I always approach for all trades is that when I enter a trade, or when I enter a position, is that hey, I'm ready to lose whatever amount I put in this. So one thing is I think leverage is an important part. And I do use leverage from time to time. Of course, when I do use leverage, I'll have a strict stop loss for that, so that it doesn't go beyond that. And like hey, if I mentally am prepared to lose, for example, 5,000, I do not wake up with a $50,000 shock. It's something like this, having a very strict stop loss for that. Secondly is, yeah, like what I said, I'm really prepared to lose for all spot positions. Yeah, if I'm going to put a long position of 5,000, then yeah, sure, like just mentally write it off, that $5,000. It may not be what everyone use as a mental tip for it, but that's what I use for that. The long game is the game to play for the long term, to be in the market for the long term, and to have a net positive rather than have like insane swings year to year. Totally not good for the health, can promise that. Yeah.
Awesome, thank you. So as we wrap up, could we get some parting advice for the audience who wants to get into crypto trading?
I would say understand why you're trading. Yeah. So well, understanding why you're trading, that comes in many levels. We have pure technical charting traders who may not fully understand the assets that they're trading. Totally fine. As long as you have proper levels, understanding the strategy they're going to use, you get your proper stop loss levels, your take profit levels, that's really fine. But if you are someone who really knows, takes comfort in understanding what you're trading in terms of the asset fundamentals, then yes, that is something that it will be good. Because in the longer run, if you look at even equities and all, I think the longer term play is the one that outperforms the shorter term play. Yeah, unless of course you're someone like a legendary trader like Jesse Livermore or something like this along the line. But yes, really understanding asset fundamentals, if that is, your cup of tea, that's what really is important. Like, yeah, if you're going to trade Bitcoin, you understand Bitcoin. If you're going to trade other crypto assets, other layer ones, all the different DeFi protocols and all this, yeah, please understand. Or even NFTs. NFTs, like people they may be saying that, hey, it's just a JPEG. Why are you buying a JPEG and stuff like this? Pretty sure 50% of the time they do not have a proper answer for that. But there are also those people I spoke to that, hey, there's this particular utility, there's a branding angle, there's an IP angle to it, that kind of thing. So yes, there may not be a perfect valuation model or metric to, I think, cryptocurrencies and NFTs at the moment, but having this level of understanding, I think that's what's important. And with that level of understanding, you would have a better appreciation for what the asset is, and from there it's just expanding your whole knowledge base and like going into it all. Of course, the last one is please have proper risk control in terms of the assets that you're going to play with. Yeah, leverage is a powerful tool, but also it's a double-edged sword. Like, it's gonna, yeah, it won't really fare well. And we will all want to be, like in this crypto market 10 years time, 20 years time. You still want to be active in it, and be part of this revolutionary changing, life-changing event that we are experiencing now. I think just a recent thing that we are just detracting a bit from there is a recent thing that I've heard from someone else is that this is comparing the current crypto market like to how I think the internet was kind of evolving, not the internet era, but it's more of like how internet went from the 56K modem. Not sure if you heard of it, like when you have the quirky sounds coming from modem, how it transitioned into the broadband era. Yeah, so now like we want to play long game so that we can, like properly go into the whole broadband era of crypto itself. Yeah.
Awesome. Yeah, the broadband era. I like that. I'm going to quote that. Awesome. Well, thank you so much. Actually, a quick little side note. So, because you mentioned NFTs, what do you think about NFTs personally?
Personally, NFTs, I really do think they have this place. Because personally, I'm really quite active in NFTs. I think one of the key NFTs, not financial advice, is I'm really the Pudgy Penguins, and they have a whole great IP angle into it. So yeah, I think NFTs itself, it has its place. But of course, like in the past 1 or 2 years, that that we saw the rise of NFTs, and now like many NFT projects have seen a 90% down in terms of the floor price. I'll say it's just a natural part of the market, price discovery and all. Because things got a bit too inflated, and now people are trying to find out like, hey, how am I going to properly value this NFT? Like what utility, what benefits do I get out of it that justifies its certain floor price of value? And I'll say a little side note to that also is that from NFTs you have soulbound tokens, SBTs, and also you have semi-fungible tokens. There are many things that come out of it. So NFTs, I'll say, is a really good first layer foray, into this new for I think mainly a lot of retailers possibly to get on board, because now instead of crypto coin A, like we can't really see it, there's just an internet and all this, but now they can actually kind of see what they're getting into. There's a certain graphic attached to it, and well, now it's the entire market realizing, finding out what's the utility behind it. As I mentioned, is it related to Web 2 kind of like utility, IP angle, commercial angle, or is it like a more Web 3 kind of angle to it? So yeah, definitely NFTs really do have its place. Well, we could go on like next hour talking about it, but yeah, it's a whole separate topic on itself.
Awesome. Yeah. We might have to get you back on the show just for that.
Part 2.
Part 2, yeah. Thank you so much, Coby, for taking the time to chat with me. And thank you, viewers, for taking the time to watch this video. If you enjoyed the content, don't forget to like, comment, and subscribe. If you'd like to take on some of Coby's advice in crypto trade, don't forget to check out Globe Exchange. Happy Globe trading, and I'll see you next time. Bye.